I always get a lot of questions about accrual-based accounting versus cash-based accounting, and when it makes sense to move from cash to accrual, or does it ever make sense to have cash-basis accounting or not, right? So, a couple kind of points here is number one, our focus and what your focus should be as a small business owner should be understanding the financials and actual information of your business, not having you save money on tax returns, right? So internal management understanding of your business typically is on accrual-based accounting. What accrual-based accounting does is it matches revenues, cost of goods sold, and expenses that are earned and incurred each month, which allows you to compare months over months to see trends within those specific items, right? Cash-based accounting is essentially just accounting for when money comes in and out. That can create much bigger kind of ups and downs and non-comparative data between months. So best practice is accrual-based accounting for your business. Now, if you're an inventory-based company, it's even more important, right? Because you need to ensure that when you pay for inventory, and let's say you pay for a bunch of inventory, that shouldn't go directly on your profit and loss and the cost of goods sold, which is cash basis accounting. It should go on your balance sheet, and then you should, amortize it when you or expense it when you actually ship out or sell those products. Then you're able to see kind of month over month gross margins, by product line, by a sales channel, overall as a company, which helps you understand your business, helps you understand your break even points, right? And can see your profit and loss month over month to understand, when you're going to hit profitability, if you're ever going to hit profitability, etc. Understanding cash is super important. One of the top two or three, KPIs and metrics in your company that you should be focused on. Cash, 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 right? But again, at the end of the day, the sustainability of your business and the understanding of, do you need to do tweaks in terms of expense reduction, raising prices, adjusting for different team members, contractor versus vendor, or versus employee situation. Decisions really comes down to understanding your month over month financials in terms of inflows and outflows, margins, break even points, etc. Fixed expenses, variable expenses as well. Variable expenses change based upon the number or impact are impacted by sales each month, where fixed are kind of those that are set in stone month over month, not dependent on sales. So high level, as soon as you can, move to accrual-based accounting, especially an inventory-based company, service-based company, best practice to move there. Understanding your cash is king, and reconciling that profitability and P&L profitability on accrual basis to a cash consistently, and understanding that as well. And then the last thing, you can be accrual basis for internal management reporting, which is again highly recommended and best practice. And then you may need to be for tax purposes cash basis, which is completely fine. And the majority of small businesses do that, especially service-based companies. So hope you got information from that, and really understand a little bit more what the difference between accrual versus cash basis is.